Today, we're going to be talking about accreditation status and how you could be missing out if you don't know if you're accredited. I speak with investors all the time, and one of the main questions I get asked is, am I accredited? What do I have to do to prove that I'm accredited? And why? Okay, let's start off by talking about how do you become accredited? The real answer is, what qualifications do you need to have in order to be considered accredited? There's an income approach, there's a net worth approach, there's a certification approach, and then there's a more institutional approach. Let's go through them one by one. The income approach. Do you make $200,000 a year? Or with your spouse's income combined, do you make $300,000 a year? This alone would consider your family an accredited investor. If you don't hit that threshold, do you have $1 million of net worth? Now, this would be not including your primary residence, but would include any other ancillary real estate that you have that isn't your primary residence. The third one is a certification approach. Are you a broker-dealer? Do you work as a director level hire for a financials firm to where you might have training and certifications that will qualify you to be an accredited investor? And then finally, the institutional approach. Are you invested through a fund that has invested $5 million or more? If you have, then maybe it's not as important for you to personally qualify for accreditation status because you're going to fit under the accreditation status under that fund's accreditation. So why is this so important to talk about now? Well, what I've found working at Viking Capital is that the SEC hasn't changed their laws in so long. So if you think about how much income was relative to cost of living in the 1990s or the 1980s, all the way till now, your money doesn't go as far. You also make a lot more money. So really, accreditation status is almost a gift to where people that qualified in the 90s or the early 2000s, it's so much easier to qualify now. And what you're seeing is a huge influx of accredited investors. Now, the way this manifested for me at Viking Capital was I was talking to hundreds, if not thousands of investors. And the first question they had was, well, I don't think I'm an accredited investor. Or what does it take to be an accredited investor? And the truth of the matter is that many folks weren't accredited 3 or 4 years ago. But because of massive wage increases and massive net worth increases with the values of real estate and general inflation, the wage growth has grown so much that there are many people that are accredited that didn't know they were. In fact, nearly 50% of today's accredited investors, of almost 19 million people, was created over the last 3 years. That's nearly 6 million additional accredited investors, many of which have no idea that they have access to these stronger opportunities in the alternative real estate space. So let's talk about this inflation concept in a step-by-step approach. If you have a massive printing of money and the prices for goods and services go up, in order for supply and demand dynamics to stay relative to the cost of goods, folks need to make more money. And this is why wages tend to correlate with highly inflationary periods. So when wage growth shoots through the roof like it did from 2020 to 2023, what you end up with is an opportunity for folks to really find themselves as another class of investor. And mainly this is due to the lack of updating in SEC rules and regulations. So now let's dive into those details a little bit more and really discover why this phenomenon happened. What happened in 2020 that caused massive inflation? I think most people understand that COVID and the shutting down of the economy and the massive printing of money created a lot of additional funds in the system. What did that do for people's wages? There were hiring sprees where companies couldn't find folks to work. Wages were growing so rapidly, and there was such competition for human capital in many areas, especially in tech. As those wages grew, many more people hit that threshold where $200,000 might be like making $100,000 10, 15 years ago. So as people kind of break through this barrier and find themselves in this accreditation classification, now they have an opportunity to really put their money to work for them and really leverage this opportunity as a way to grow their wealth. So why should you care about becoming an accredited investor? Why is it so important? As an accredited investor, you have a few really beneficial aspects. You get to take advantage of being able to diversify. All of your money shouldn't be put in traditional equities. This gives you an opportunity to participate in alternatives like real estate, venture capital, really across a lot of asset classes. And diversification is key to mitigating your risk. You're going to get a tailored approach. Real estate sponsors, other investment sponsors want your business. They're going to find ways to help create educational content, help you learn how to mitigate risk. And you're going to have groups that are tailoring this approach just to attract you and the opportunity to help you grow your wealth. You're going to be able to take advantage of really immense tax advantages, especially with real estate, through 1031s, through bonus depreciation. The opportunities are really endless, and it's definitely something that's worth your research. So why do accredited investors choose multifamily real estate? The reasons for choosing multifamily real estate really boil down to A, they're a great hedge against inflation. So if you think about it, inflationary periods, the cost of goods go up, the cost of rents typically correlate, and they'll also rise. When rents increase, like you saw in COVID, 2020 to 2022, 10%, 15% rent growth at the property level. And what that correlates to is additional NOI, which means a really large amount of forced appreciation on the asset. In addition to that, multifamily is a primal need. People need shelter. If you invest in other asset classes, there are times and places for those asset classes to shine. But retail, manufacturing, hospitality, they're more prone to disruption. You saw what happened with COVID. Hospitality really took a hit. Office really took a hit. Both of these were really considered darlings prior to that, where a lot of people didn't understand what disruption could occur. With multifamily, you pretty much know people are going to need a place to live. And as the cost of buying a home gets more expensive, you've created a dual opportunity where there's renters by choice who want to have the flexibility of living in different areas, being able to work remotely, maybe travel more, and then renters by need, where they can't afford to buy a home and they're left with finding a really quality apartment where they can have their family and have stability. In addition to that, you're going to have the tax benefits that we previously mentioned, 1031 opportunities to where you can really avoid paying taxes. You roll money into different investments. You'll have bonus depreciation, which will allow you to offset passive income. And really what a lot of real estate investors do is they invest, they roll their capital year over year into other investments, and then they leave it to their children with a step up in basis, and those taxes go unpaid and not needed to be recouped by the next generation. So creating generational wealth is something that is really prevalent, and that idea really runs true through real estate investing. Okay, so let's talk about why accredited investor status is so important, and what was the SEC thinking, and why did they create these rules? So the real true answer is that the SEC created these rules to protect investors. There's two types of regulations, Reg 506B and 506C. And the main differences between the two compliance regulations with the SEC is one is reserved for sponsors who are going to use a friends and family network, and they're not going to solicit or advertise their investments. And then there's 506C, which is the newcomer to the game, which is if you're going to use social media or you're going to use internet or email and you're going to reach out to people that you don't know to solicit investment. 506C is those compliance regulations that you're going to utilize in order to be compliant with the SEC. Now, traditionally, 506B, it makes sense why the SEC felt the way that it did. You have an opportunity to go to your friends and family, explain what the investment opportunity is. You can take accredited investors and non-accredited investors. However, non-accredited investors are going to be limited to 35 individuals. Accredited investors, you can have as many as you'd like. Now, what's important here that is, kind of the fine print is with 506B, the accreditation status is self-accreditation. So if you're an investor and you tell me as a real estate sponsor that you're accredited, I can take that at face value and check the box and say, I asked, they self-certified that they're accredited. With 506C, The onus is on me as a real estate sponsor or the representatives there within to find out without doubt that you're accredited. So this means that we have to have you fill out an accreditation letter, your CPA to certify it, or go through software like Parallel Markets, where you're going to actually upload tax returns, deeds to property, or certifications that you might have to prove that you're an accredited investor. So why did the SEC do this? Why are they making it so hard for the whole entirety of the public to participate in these deals? And the answer is risk. So the SEC wanted to find a way to protect investors, and what they determined was that if you are someone that makes $200,000 or more, or you have $1 million of net worth, that you're more likely than somebody that has $200,000 of net worth, or maybe only makes $50,000 a year. And they wanted to limit the ability for real estate sponsors to go and solicit investments from people that didn't have the sophistication or the knowledge to make good investments to protect their downside risk. So these two different classifications of 506B versus 506C are truly what the SEC has put together to protect you as the investor. And then it also puts a little bit more pressure on sponsors to make sure that we're building a network of investors and helping them understand how to invest in these deals and ultimately how to attack risk and create the best risk-adjusted returns. All right, so now that we've established if you're accredited or you're not accredited, what does that mean for your investment opportunities? So unaccredited investors are able to take advantage of public investments. The public investments are going to be the things like traditional equities, stocks, bonds, REITs. These opportunities, are great, and they will help you create a well-structured and balanced portfolio. But as you reach accreditation status, as you build your sophistication, and as you build the ability to evaluate other deals, then the SEC gives you access to other alternative investments. This is where you're going to find syndications, traditional real estate private equity, pools of capital where you're able to get in to a company that maybe isn't established as a REIT or a publicly traded company. There's less compliance standards, but you're also working with real people that are doing the work at the property level or at the VC fund level. So as you grow your ability to evaluate whether deals are strong or not strong, or really what you're looking to do is to match your risk profile with a deal, as everybody knows, risk and return are correlated. The higher return usually correlates to higher the risk. The lower the return usually correlates to the lower the risk. So as you evaluate these deals and you look at real estate private equity, you're really going to understand that those private investments, whether it's private equity or private debt, really give you an opportunity to work directly with the sponsor, cut out a bunch of middlemen, and really supercharge your investment horizon. So where did the opportunities with Viking lie? So working with Viking, you're going to be working with a private company, medium-sized real estate private equity firm with $1 billion of acquisitions, 17, 18 current active properties in our portfolio, and you get to participate as a limited partner alongside us as the GP. So these types of investments are going to fit into that private world. We have both equity and debt instruments at our disposal, and we'd love to chat with you more about the opportunities that we have open and available today. All right, so as we've gone through this presentation, we've gone through the typical ways that you can find out if you're accredited or not. Now, a gift from the SEC, as more people have complained, that alternative investments really should be for everybody. You shouldn't have an income threshold. You shouldn't have a net worth threshold. The SEC took these concerns seriously. So they created a REP program, a registered education provider program, where you're able to work towards building certifications. And the idea here would be, if you really want to participate in the space of alternative investments and you want to work with private companies and you believe that you're able to self-teach yourself how to evaluate risk and how to really protect your wealth, then you can enter one of these REP programs and gain the certifications to where the SEC feels comfortable that you actually have the knowledge base to protect your wealth. And if you choose to go down this path, there will be some effort on your part. You will have to go through courses and will have to get certification. But once you get the certification, you will have all the same opportunities that every other accredited investor that has hit that threshold through income, net worth, or professional status. So now that you've established that you're accredited, what's the process like? How do you get your accreditation letter? How do you get ready to start evaluating opportunities? So the way that you get your accreditation letter is going to be through a sponsor like Viking will provide you a form letter. And if you're working with a CPA and they feel comfortable vouching for your net worth or your income, they simply fill out the letter, sign the bottom, send it to us, and we log that in our system. If for whatever reason they choose that they're either not a licensed CPA and they're more of like a tax preparer, or they don't really want to provide this letter or sign for whatever reason, you're still able to go through software like Parallel Markets. It's a free service where you'll go in, they'll ask you for tax returns, they'll ask you for proof, deed of property you might have, whatever you're using to bolster your argument that you make either the income approach or the net worth approach, or simply upload your certification letter from the rep program you did to prove that you're accredited. And then Parallel Markets will send you an accreditation letter, and then you'll forward that on to us or any other sponsor that you're working with. Now, another big piece here is how often do I have to do this? How often do I have to recertify? And the answer is that currently there's a 5-year look back. So if you give me an accreditation letter today, for the next 5 years, you can invest as an accredited investor without recertifying. After that period expires, you will need to go through that same process of having a letter recertified by your CPA or going through software like Parallel Markets. And the rules change sometimes. You'll always want to make sure that they've continued the 5-year look back. But as the rules sit today, that would buy you another 5 years before you have to recertify. Okay, so we've covered a lot today. We've covered accreditation status, why it's important, how to certify, how to recertify, where you might be able to find investment opportunities. We're here as a resource for you. We've put together an investor toolkit. Please reach out to my team in order to see the other materials that we put together. And don't be a stranger. Reach out to me, reach out to my team. If you have more questions on accreditation status, or you want to evaluate opportunities that might be available to you now that you know that you're accredited, we'd love to hear from you. We'd love to help support you in your investor journey any way that we can. Until next time, thank you.